Welcome to this Premier Training revision video that takes a look at PEST analysis. All organisations need to understand and adapt to the environment they operate in. Much of the time, this is likely to include factors outside of your control, such as laws, lifestyle changes, and technological trends. To be successful, a business needs to be able to anticipate how these external factors might affect them in the future, perhaps in order to identify and take advantage of new opportunities, or even avoid potential threats. So how can a business effectively analyse its environment? One strategy is to carry out a PEST analysis. So, what exactly is a PEST analysis? PEST stands for the political, economic, social, and technological factors of a business environment. Let's take a closer look at each of them. First up are the political factors. All firms have to follow the laws of any country they operate in, and managers need to know how existing or upcoming legislation might affect their activities. And the political environment can impact business organisations in a variety of different ways. For instance, trade tariffs can significantly affect profitability for both importers and exporters, making the cost of goods more or less attractive to their consumers. Health and safety laws might affect whether products are accepted in a particular market or have an impact on an overseas workforce. Changes in the minimum wage may make labour-intensive products more expensive to produce. And of course tax, which not only affects how much a business may pay directly, but also on how much disposable income their consumers will have. So governments have a high impact on the health, education and infrastructure of a nation, and all companies should be ready placed to deal with any upheavals in local and international politics. Failure to be sufficiently prepared could lead to major operational problems and ultimately losses. Next are the economic factors. The economic climate a business operates in can have a significant effect on its performance, both in terms of sales and costs. So important economic factors to consider are how stable the current economy is. Is it growing, stagnating or declining? Are customers' levels of disposable income rising or falling? And how is this likely to change in the next few years? For example, in a period of recession, employment levels, consumer confidence and consumer spending falls. Conversely, in a period of economic recovery, employment, investment and consumer confidence and spending rises. Interest rates can be levied by a range of different organisations and will be of great importance to companies whose strategy might rely on credit or taking out large loans. But the level of interest rates will also affect consumer spending. And exchange rates are of great importance to firms who import or export goods and raw materials. For instance, varying exchange rates will affect how much a company has to pay international suppliers, as well as affect the competitiveness of its own goods to overseas customers, all of which will affect profit margins. Next are the social factors. The way in which a society operates and changes over time can have a fundamental effect on the operations and therefore profitability of a business. Things to consider might include a society's population growth rate and age profile, and if this is likely to change. This could affect future demand for your product. A society's levels of health, education and social mobility may impact on the skill levels of your available workforce, or the potential market for your goods and services. Regional social attitudes and taboos could also affect your business. These vary tremendously between different countries and cultures, and you may need to rebrand or redevelop your product to be accepted into different markets. And fashions, trends and lifestyle choices will also vary tremendously both locally and globally, and can affect the prospect of sales of a particular brand or product. And finally, we have the technological factors. In today's high-end consumer marketplace, technological factors are possibly one of the most important factors to consider, such as, are there any new technologies on the horizon that could radically affect your work and your industry? This could give you the technological edge over your competitors, but equally you could get left behind if you don't invest in new technology or innovative methods of production. Can a business take advantage of changes to technological infrastructure, perhaps to allow more remote working, providing a potentially cheaper and more agile workforce? Do you need to invest in more research and product development? Some technologies move fast and have short life cycles, and businesses may need continuous innovation of their product to maintain their market share or sustain growth. And it may be that advancement in technologies will make your current product or market obsolete. And if this is the case, it'll be important to be adaptable to change, or equally, create or seize new opportunities. So it's easy to see how technology not only affects the way a company manufactures its product or delivers services, but also how it affects the market in which a company operates. So this completes our look at some of the possible factors involved when completing a PEST analysis. However, you may come across a couple of variations that expand upon these 4 factors, and one of these is known as a PESTLE analysis. Expanding the analysis to a PESTLE analysis adds legal factors, and additional legal factors could include things such as discrimination law and consumer and employment laws, which could potentially affect how a company operates, its costs, and the demand for its products. And finally, there are environmental factors which might need to be considered, and these could include ecological or environmental aspects such as the weather or climate change, and these are going to be especially important to industries such as tourism, farming, or insurance. For instance, a growing awareness of the potential impacts of climate change can affect how a company operates and the products they offer, both creating new markets and diminishing or destroying existing ones. So, in summary, a PEST analysis involves holistically analysing a business environment in order to understand long-term trends and how they might impact on a company's operations. And whilst it may not be possible to change any of these external factors, it's important to understand what they are so you can take advantage of opportunities and avoid any potential threats in the various local environments in which a business operates. I hope you've enjoyed this Premier Training revision video, and thanks for watching.